don't adopt Bitcoin and fuse it with our debt, if we don't put it on the asset side of our balance sheet, then liability growth is going to continue to outpace asset growth. And eventually, trust will be lost. And when trust is lost, we will transition from inflation to hyperinflation. If we really want to take the lead in the internet economy, we also need a Bitcoin recapitalization fund that allows us to perform this financial innovation, that allows the US government to issue Bitcoin bonds. With a Bitcoin bond, you're getting 20% plus APY with principal protection from the United States government. This type of engineered debt that inserts and integrates and fuses engineered money into traditional debt fixes that problem. One thing that's amazing about the strategic Bitcoin reserve is that local politicians are waking up really quick. So you're going to see these small towns and cities, they're going to create their own strategic Bitcoin reserves as well. And they'll be issuing, I believe, what they call municipal Bitcoin bond. Right now, you can go and make a promise to your banker and he'll loan you money from 4 to 6%. If you have Bitcoin collateral and you want to post $1 million of Bitcoin collateral and borrow $500,000 against it and be 150% over collateralized, you can borrow at 16%. You see how that doesn't match up? We're in the middle of discovering what is Bitcoin's entire value proposition and how much should it cost me to access this perfect, pristine, truthful ledger in a world full of lies. And I think we're going to find out that that value proposition is quite a bit higher than $100,000.
Well, thinking about, how much higher than $100,000, how do you think about the future value of Bitcoin?
So as the creator of the Bitcoin fair value algorithm, that process I just described is called a commodity cycle. And I created the algorithm to help the miner decide where they are within their commodity cycle, because each miner has there's not a universal plugin. There's so many variables. There's land, labor, materials, and different miners have different costs and different operational expenditures versus capital expenditures. So VFV is highly customizable. We'll come in and we'll help you determine your cost basis. And then the market price relative to your cost basis tells you where you are in that commodity cycle. And when you're at a premium, you want to lock in profits and capture that premium. And when you're in a discount, you want to deploy those profits because you're a miner. So whether you mine with dollars or electricity, it doesn't matter. Both need to be used to be fully efficient. And when you're at that default, you deploy the dollars, you turn off your machines, you deploy the dollars to mine Bitcoin, and you're still building Bitcoin. And that's really important for people to understand because that's how it's worked through these past halving cycles. The past halving cycles worked like this because the halving is the catalyst to the doubling of the cost of production. When a halving takes place, that very block, cost of production doubles. Now we have to go through a new price discovery cycle. But that's the commodity cycle. I believe, to answer your question, we are now moving out of the commodity cycle. Michael Saylor's famous comment of all your models will be destroyed. I'm looking right here in the mirror and I'm saying, yeah, he's right. My model is going to be destroyed. Like, it's still going to be relevant. I still want to see how high of a premium we go to. But the fact of the matter is that at the bottom of the S curve, you're in a commodity price discovery cycle. But Bitcoin as a commodity is now being monetized. So the monetization of Bitcoin is now accelerating us up the S curve of adoption. And what's that's going to lead to a complete repricing. Right now, price is trying to catch up to hash rate. When Bitcoin is repriced, hash rate will be trying to catch up to price. So we're entering into a time right now where the old 4-year market cycle and understanding it as a commodity cycle and the premiums to the cost that the miners are looking at, who set the price margin because they're the only forced sellers of the asset. That is changing. That market dynamic is evolving because we're now seeing mainstream adoption and monetization. And I think now it's going to be based more on credit cycles than the commodity cycle. Not yet. We're not there yet. We still need to see all this stuff take place. We still need to see how all of this game theory plays out. But I think the new administration gets in there. We get a federal strategic Bitcoin reserve. We get the states doing the strategic Bitcoin reserves. Cities and municipalities are going to do the strategic Bitcoin reserves. Lord willing, we can get the Bitcoin recapitalization fund, and we see cities issuing municipal Bitcoin bonds, and we can really start to pick up this pace. But the better that picture becomes, the more aggressive the repricing on Bitcoin is going to be because it's price agnostic demand. It's price agnostic demand. And when a city or a municipality or a state or the federal government starts buying Bitcoin, they are not going to care what the price is. That's not how it's going to work. They're going to dollar cost average. So what they'll do is they'll take a portion of the taxes that they collect, and they'll take that agreed upon percentage, and they'll just buy Bitcoin. And they don't care if it's 100,000 or 100 million. They do not care what the price is. It's price agnostic accumulation. And because of that, I think we're going to see the entire 4-year cycle mature, because we're moving out of the commodity, right? When Bitcoin was a commodity, it behaved in a commodity cycle. It's now being monetized, so it's going to behave like money within a credit cycle. So all of these things are converging right now, and we're in that interesting in-between time right now. And I think for the next 5 years, we're going to be in that in-between time. But again, you add another 5 years onto that, and I think the system is not even going to look anything like it does today.
Yeah, I mean, this has all been incredibly fascinating. I have a few more questions for you. When studying history, what have you noticed about how inflation turns into hyperinflation?
Yeah, so to me, even though the textbook tries to put a mathematical number on it, what I've noticed across all time and space, whether you look at Rome or Greece or Weimar or Venezuela, there is no mathematical way to define inflation. Inflation turns into hyperinflation. One and only thing is found the same across all these examples, and it's when the people who use that currency lost trust. So the difference between inflation and hyperinflation is trust. So if we continue to abuse the system and we don't take the proper steps to build trust, one day that trust will be lost. And I like to say right now, we're in financial COVID. What COVID was for the medical industry, we are now facing in the financial industry. The GDP is wrong because real GDP is not being deflated properly. So it's overstating the economic performance. CPI is understated because of substitution-based practices and manipulations. I'm so happy that we have, at least the government shares the data with us. It's probably the only thing the government really does successfully is they aggregate all of this data from 300 plus million people and share it with us. The problem is they're taking that raw, authentic data that is actually true, and they're plugging it into manipulated equations, which tweak the data, which then tweets the output, which then creates unreliable information. So in the financial world right now, the government would have you think that real rates are positive because inflation is 2% and the treasury bill rate is 4.5%. And 4.5% minus 2% is 2.5% positive. So, hey, you should lend us money because at the end of it, you're going to be able to buy more stuff. Yeah, but 2%, what are you talking about? In what world are you living in? My bills are up way more than 2%. You don't have, you're trying to, I'm offended that you're trying to tell me inflation is 2% when my bills are up at least 5 to 10% on everything I spend my money on. So where's this 2% number coming from? And that doesn't do any good in building trust. So we need to be really careful here because the medical industry is right now paying the price for the trust that they abused. And we don't want to pay that price in the financial industry because the loss of trust in finance is going to be the difference between being in an inflationary recession versus an hyperinflationary depression. And that's the only difference, trust.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.